So here is HYMC, Hycroft Mining Holding Corporation. This finishes at $1.88 today. That is up 25.33%. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is MULN Mullen Automotive. This finishes at $1.35 today. That is up 26.17%. So once again, we're talking about this stock. Been talking about it every single day for the past 2 weeks. It was trending on StockTwits, number 2 after SPY. So we got to talk about it once again. So it did look like the squeeze is over, was losing momentum. But today, out of nowhere, we got some pretty big volume, some very big price action. So maybe the squeeze is not over. So no company-specific news to justify this price action. It just seems like shorts starting to cover. Social media sentiment still strong. Apes piling in here, pushing the stock up. So let's go ahead and analyze. All right, so first of all, we have a gap down at 1190. That is a bullish indicator. That is telling us that the stock should eventually come back up to 1190 to fill this gap. May take a while, but eventually it should. And then we have another gap down at 465. So that's another bullish indicator. That is telling us that the stock should eventually come back up to 465 to fill this gap. And then we have a descending wedge here, which is another bullish indicator. So right now this looks like it's consolidating between 170 and 85 cents. So it looks like there's a little more consolidation to go, but after that it should break out to the upside. And then this looks like a huge cup and handle in the making. Bottom of the cup being the low of 52 cents. And there could be multiple possible tops. It could be 190, 380, 585, 740, $9, 980, 1070, 1180, or even the high of 1590. Although I do think the most realistic top would be 190 or 380. But those are all bullish indicators. That is telling us that the stock should eventually come back up to one of those tops to complete the cup. And in the aftermarket here, this is up to 139. So that would be another bullish indicator that is telling us that the stock will probably run to the upside on Monday as well. And then we do have a gap up at 62 cents. So that would be a bearish indicator that is telling us that the stock may pull back down to 62 cents to fill this gap. And at this point, it does look pretty unlikely, but possible. So just be aware of that, guys. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is sitting on the support of 135, which it finished at today. So if this goes to the upside, next levels of resistance would be 170, 189, 223, 257, 272, 291, and then 322. There is resistance above 322, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 113, 98 cents, 75 cents, 60 cents, and then 52 cents. 52 is the all-time low, so no support below that. So right now at this current price, 135, the channels to the upside are pretty wide, so expect a significant increase in price action if this continues to run to the upside, up until this hits 257. Then the channel starts to narrow, and the price action should go back to normal, but that is bullish if this continues to run to the upside. And to the downside, the channels are regular sized, so expect a regular amount of price action if this runs to the downside. RSI is currently at 46, so pretty average there, a little bit below average. So according to the RSI, this current price of 135 is around fair market value, maybe should be a little bit higher. And this did 239 million in volume today, very significant volume, way above the average. So this pump today was confirmed by the volume. So just my opinion, not financial advice, guys, and my opinion has not really changed. So longer term, this definitely looks like a pretty good buy. A lot of bullish indicators, a lot of upside potential. Again, double gap down, cup and handle, descending wedge, aftermarket action, all bullish indicators. This should come back up to 1190 in the long term to fill the gap, and that would be like a 1000% upside. So a lot of upside potential. In the short term, this will probably stay pretty volatile. Only bearish indicator is the gap up at 62 cents, and we have a neutral indicator in the RSI. So this may come back down to 62 cents in the short term. Pretty unlikely, but possible. But other than that, this does look pretty bullish. So if you want to go long, not financial advice, you missed a big run today, 26%, but still 135 is a pretty decent entry, especially if you're willing to hold for the long term. Again, a lot of upside potential, a lot of bullish indicators. So if you're trying to quick scalp this for a quick gain to the upside, I don't really recommend doing that. But if you're in this for the long term, 135 still appears to be a pretty good entry. Again, it's possible this pulls back to 62, but if you're in it for the long term, that really shouldn't matter. So I would support going long at 135 and lower. And if it pulls back below 135, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, I would not do that, and I wouldn't recommend that. Not saying that's a bad play, but pretty risky. Again, a lot of bullish indicators. This may pull back down to 62 cents from the current price of 135. That'd be over a 50% downside, so a lot of money to be made here. Although I do think that is unlikely. So I would say going short here would be a high risk, high reward play. Could pay off pretty big, but can go pretty wrong pretty quickly as well. Apes really like this stock, still has a lot of momentum. So I don't really think going short here is the greatest idea. Not saying it's a bad play, but very risky. So if you want to do that, please do it at your own risk. So pretty straightforward here, guys. A lot of bullish indicators. Looks good in the short and long terms if you want to buy here. And I don't think going short is the greatest idea, but could pull back down to 62. That would pay off pretty big. Just really risky. So congratulations to everyone who made money in the stock today. And good luck to everyone currently in the stock and to everyone looking to take a position. This is MULN Mullen Automotive. So here is HYMC, Hycroft Mining Holding Corporation. This finishes at $1.88 today. That is up 25.33%. So I did a video on this stock yesterday, before it really blew up on StockTwits. So this is definitely in the middle of a short squeeze right here. So this mooned yesterday, mooned in the aftermarket as well, and had a pretty big run today, although it is pulling back here. But yeah, a lot of mentions on StockTwits, so we will analyze this once again. So no company-specific news to justify this price action today. It just seems like gold is pretty popular right now due to the Russia-Ukraine situation and inflation. And this is a low-float stock, so not hard to squeeze this. So let's go ahead and analyze here. First of all, this does appear like a cup and handle in the making. Bottom of the cup being the low of 28 cents. And there could be multiple possible tops. It could be 270, which it hit today. So if the top is 270, that would be a bearish indicator at this point. But if the top is above 270, it would be bullish. It could be $3, $3.35, $3.95, $4.20, lol, nice. Or even the high of $7.50. Although I do think the most realistic tops would be $2.70 or $3. So yeah, that could be bullish or bearish. If the top is 270, it'd be bearish. If it's above 270, that'd be bullish. But there is a pretty good chance this did already top out at 270. I personally think it's bearish. And then we do have a gap up at around 40 cents. So that's a bearish indicator that is telling us that the stock may pull back down to 40 cents to fill that gap. And in the aftermarket here, this is pulling back down to 177. So that's a bearish indicator that is telling us on Monday that the stock will probably pull back. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 197 and 182. So if this goes to the upside, next levels of resistance would be 197, 209, 219, 230, 245, 259, 269, 281, 298, and then 309. There is resistance above 309, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 182, 171, 160, 150, 139, 113, 99 cents, 82 cents, 75 cents, 65 cents, 58 cents, 51 cents, 43 cents, 36 cents, and then the low of 28 cents. 28 is the all-time low, so no support below that. So right now at this current price, 188, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. However, if/when this breaks 450 to the upside, the channels start to open up, so expect a significant increase in price action if/when this breaks 450. And to the downside, if/when this breaks 139, the channels start to open up, so expect a significant increase in price action if/when this breaks 139. RSI is currently at 81, so that is very overbought and very overvalued, so be careful, guys. And this did 340 million in volume today. Biggest volume day ever for this stock. So this pump/squeeze today was confirmed by the volume. Okay, guys, just my opinion, not financial advice, and it's more or less the same from yesterday. So this is obviously short squeezing, and it appears like either the squeeze is over or almost over. Biggest volume day here. It's pulling back from the high. A lot of bearish indicators at this point. Cup and handle, gap up, aftermarket action, high RSI. Really no bullish indicators. Maybe the cup and handle, but that's more long term. And no neutral indicators. So overall, the chart does look pretty bearish at this point. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that just yet. I think that would be FOMO, and you would be buying into a relative top. This is probably going to pull back very hard, and you're probably going to get burned. You're going to be catching a falling knife here. So I don't like the entry of 188. I think if you hold off, you should be able to get this back at 40 cents where the gap is. So I would set your buy orders to 40 cents. And if it pulls back below 40 cents, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, looks like a pretty good play. Again, a lot of bearish indicators. Looks like this is going to pull back pretty significantly in the short term here. So from the current price of 188 down to 40 cents, that would be an 80% downside. So a lot of downside potential, a lot of money to be made here on the downside. And it does not appear to be too risky because, again, I do think the squeeze is pretty much over. So I would say going short here would be a low risk, high reward play. Excellent shorting opportunity, in my opinion. And I would say cover once this hits 40 cents where the gap is for a relatively easy 80% gain. So pretty straightforward here, guys. Again, looks like the squeeze is pretty much done. I don't think going long here is a good idea. You missed your chance. So just wait for this to pull back before you enter. And this looks like an excellent shorting opportunity. So congratulations to everyone who made money in the stock today. Consider taking profits if you're up, not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is HYMC, Hycroft Mining Holding Corp. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.